Hi, I'm Bill Blain, market strategist at Shard Capital. Still based at home, although I have been back up to London occasionally now. For months, the markets have been absolutely fascinated by the performance theatre that we call the US election. Who would have imagined that it would become such a polarizing and divisive election? It's been absolutely fascinating, but it's also served to distract us from the real issue facing the global economy at the moment, and that's recovery from the pandemic. Back in the real world, away from Trump or Biden, the real story now is the resurgent coronavirus. And if you're looking at charts of markets at the Dow, the FTSE, or European markets, you can't help but think that it's deja vu all over again. Back in March, we were seeing the infections numbered in the hundreds. Now it's in tens of thousands. So now we have a market dominated by winter lockdowns, fears about second and even third waves of infections, and tumbling stocks on the back of prospects for a crumbling economic recovery across Europe and the US. It's put markets into full tumble mode. It might nearly be November, but this feels like it could develop into a classic October crash. And I've seen a few of these. October crashes are historically characterized by the sound of popping bubbles, euphoric giddiness suddenly being swept away on a tide of brutal and bleak reality. This time it's different. This time it's even worse. Let me try and explain. The financial history of this very young century is going to be written at some point, and it's likely to show just how badly our reliance on bailing out markets with free money, bank rescues, and stimulus packages worked out. For every action, there are consequences. The long-term negatives of overly low interest rates, the dark and sordid truths that underlie QE infinity, and the unheeded warnings about burgeoning corporate and sovereign debt. And the reality that bailing out banks has simply allowed them to shift their risks to pension savers. But in the early days of the 21st century, we've all believed that all the interventions from central banks and the authorities have been essentially short-term accommodations to sort market problems out, and ultimately they are fixable. Well, something has occurred that has changed these rules completely. You can fool the markets with massive bailouts to stop a catastrophic crash, but no amount of QE is going to stop a tiny little virus, a billion times smaller than a computer pixel, from going about and doing its stuff. And that's what's occurring now. The market is moving markets in ways that nobody anticipated when we set out to cure the 2008 crash and keep the economy going. It's completely undone central bankers' plans and investor expectations, yet we're still behaving as though the virus is just a speed bump. No, it's a complete car crash, and we don't know how big the bill is going to be yet. It's not just confidence in markets that's gone awry. This time it's far more fundamental. We face a long, cold, miserable winter coming up, and an implacable little microscopic enemy that we're still struggling to fight. Now, the reality is we will solve the coronavirus and we will beat it, but the question is at what cost? At some point, better treatments, new therapies, and repurposing old drugs will control the bug and mean that people survive. We may even get a partially successful vaccine, but never invest on hopes. We will overcome the pandemic, and that means picking the moment to buy stocks is going to occur at some point. But right now, the deepening lockdown and the economic sacrifices required to fight the virus means there's a lot more market pain still to come. The outlook for economic resurgence, I'm afraid, is looking worse as the threats of longer lockdowns and collapsing confidence amongst consumers in the wake of job losses and the ending of support regimes is going to hurt more. Now, before you question, is this a pandemic advert, let's not waste time debating whether the pandemic is real or not. The simple reality of the coronavirus is nothing to do with low death rates or the probability anyone under 65 will suffer little more than a bad flu. It's all about hospitals and health services. Although we can now treat and cure patients, that simply won't happen if hospitals are overwhelmed. Politically, it would be unacceptable, hence lockdowns, distancing, and all the other issues are going to continue and even deepen as winter sets hold. So it means picking your moment to re-enter the markets very, very carefully. It's worthwhile considering how long the pandemic will continue to depress the West even after we've beaten the bug. The contrast between the mayhem that we're seeing from COVID-19 in Europe and the US is in stark contrast to the recovery we're seeing in Asia and especially China. And that's something we need to start factoring into investment decisions as well. That's a topic I think we'll be back to discuss another day. Anyway, as always, thank you very much for listening.